Good afternoon, everybody, and welcome to our EGM Securities Update. We've got Gaurav, who's our market guru in Dubai. Gaurav, it's good to be speaking to you as always. You were going to start off with sterling. We've had a lot of noise around whether they're going to do a deal or not, but you saw some data, some higher frequency data. What's it all telling you in the UK at the moment?
Well, Ali Khan, we've seen the British pound open today's trading session on the back foot. Earlier in the day, we had some inflation data coming out from the UK. We had the data showing year-on-year inflation, less food and energy, came in at 1.9%, well below the previous figure of 2.1%. The overall year-on-year number, including food and energy, also came in slower at 2.4%, and this has seen the pound sell off through the start of the European session. Now, what our investors should always keep a rule of thumb is that whenever we have higher inflation readings, this is generally supportive of the currency. So in this case, because the inflation reading was weaker, we're seeing the pound sell below 1.3, 150 levels against the US dollar. And this has been a key level actually that I've been watching for, because that represents a 100-day moving average. So we've seen the GBPUSD symbol break below 130, 150, and we can expect to see a little bit more weakness through the trading session as more and more traders build sell positions following that announcement. It's going to be a very testing few days for the British pound coming up. Of course, this is the start of the EU summit. Prime Minister Theresa May is already en route to Brussels. We're not expecting to see any more details regarding a final Brexit deal this month. Markets are already pricing in something to be announced next month. But any comments, any further clashes that we could see between the EU and the Brexit during these next 2 days could see continued weakness in the British pound. But overall, Ali Khan, I'm not too confident in any pound positions right now. Again, if clients are looking to take advantage of pound movements, I'd probably look at selling before buying at this market. But overall, it would make more sense to probably wait for a bit more developments to come out of this EU summit.
That's interesting. Gaurav, what do you think is weighing more here? Is it the political issue, or is it the data? I mean, I know we've traded off. I saw yesterday we popped through 132, but you were talking about a target of, I think, 140. Is that, do we get that move if we get a political settlement out of the Europeans and Theresa May's government?
Depending on the outcome of the Brexit negotiations, if we do see the UK have a favorable exit where there are no boundaries with Ireland, if terms and conditions are more favorable for the UK, then we could potentially see a move upwards of maybe 1.4 in the next 1 or 2 years. But overall, to answer your question, no. I think the downsides are more relevant in the case of the British pound, and it's a combination of both factors. Again, we've seen mixed signals coming out of the Bank of England. We did have slight rate hikes. We did see some of the voting patterns change. We're seeing a bit of a hawkish and dovish mix in the Bank of England, and that has seen the data docket become extremely unsteady from the UK. So right now I would watch for data points to dictate short-term volatility, but over long term I would keep an eye out on these developments, gauge on what the future prospects for the British pound could be in the next 1 or 2 years.